Hey, welcome to the live stream. We've got the very beginning of June. It is June 1st, and stock trading continues tomorrow. And I'm looking forward to the month of June. It's been a really good month of May, really good gains in the month of May. And overall, year to date, I'm doing really well. I hope your portfolios are also doing really well in 2025. As we look at just year to date, we got 5 months in the books, working beginning month number 6 tomorrow, and some stocks that have really done well this month. Microsoft's really put it together. Big cap. Palantir is just flourishing. Incredible how high this stock has gone up. It is a retail investor favorite, and that stock's just really done fantastic. CrowdStrike's done really well, and they're going to announce earnings this week. They're going to announce, I believe, on Wednesday. So we'll see how they behave afterward. Zscaler announced last week they had really good earnings, and their stock went up almost 10% after they announced earnings. So that's kind of a tell of what's going to happen with CrowdStrike this week. It should be a good week for CrowdStrike and other security software companies. Palo Alto did okay for year to date. Year to date, Uber's done fantastic. Nice job, Uber, up 39%. Intuit up 20%. Old school tech, IBM up 17.85%. Nicely done. In the consumer staples category, Costco just continues to flourish. It just continues to go up. It really popular retail stock. People really like Costco. They like the stability of Costco. Who's to blame them? Walmart is doing well year to date. Coca-Cola is doing well. Tobacco stocks are doing great. I think PM, I don't remember which one this is, but they are doing great, 50%. Aerospace and defense done fantastic. GE, part of it is that their turbines are expected to be part of the energy complex, and they're really flourishing for that reason. So these stocks are just flying up. Picking the right stocks is really key to making your portfolio really work in a given year. Berkshire is up 11% year to date, but the month of May was a bad one for it. It's actually down 5%. And what's interesting is after the Berkshire Hathaway meeting, which happened at the very beginning of May, that stock sold off for the rest of the month, while other stocks did really well. So is that the beginning of a trend, a negative trend for Berkshire Hathaway? Could be. I'm going to follow that. Credit services, Visa did great. JP Morgan did great. Even Citibank up to 7%, nicely done. And other financials did really well. Progressive Insurance continues to do really well. Allstate did well. Chubb did well for the month. That looks good. Even the ICE, which is a more of a financial platform company. They set up markets and they operate markets. They did well. Meta year to date is up 10%, and they've had a lot of volatility. On the other hand, Google's down, but Google had a decent couple weeks. Netflix is best in its class. Netflix is really up nicely, 35%. Wow. T-Mobile's up nicely. So is the other telcos. In healthcare, there is some good news and some bad news. Looks like Merck's down big. United Healthcare just got really beat up, down 40% year to date. And I think it opened up a nice opportunity in a really good company. In med devices, a couple of stocks are doing really well. So there's been plenty of places to really get performance out of this market. And when we look at what big investors are doing, let's take a look at super investors. The one that's doing the best is Michael Burry. He got into Chinese stocks and some tech stocks. Then he got out. He's in one stock right now, Estee Lauder. David Tepper, he's doing great. He also went into tech, China, and bought the right stocks. He's gotten really good performance out of them. So these guys are making it happen, and everybody else is below the S&P. Even these big professionals, right? They cannot beat that S&P, and some people can, and it's not a matter of these investors beating the S&P every single year. It's just how often do they beat it. Guys like Pat Dorsey, he usually beats the S&P. His performance over the long haul is really good. So I'm not going to doubt him just for having a bad year. He's done really well in the past. And of course, Warren Buffett, he's done great. So his portfolio, and this is not the Berkshire stock, it's the portfolio that they manage. That's what I'm looking at. It's down 1.58%. So it's been an interesting year. You got to be able to pick out the winners from the losers and have your capital deployed in the right places. So hopefully that's been the case for you. That's what this channel is about. This channel is about trying to find the companies that are underappreciated, priced really well, buy them at the right time, buy really desirable companies that are discounted, and then hold them and see your investment go up for the most part. So that's what we're about. Looks like we've got a lot of people on the stream. Thanks so much for joining. And let me know if there's a topic, a ticker that you'd like me to look at. If you're a member, I can review tickers for free. If you're not, $5 super chat, and I can review a ticker for you in its entirety. We'll look at the desirability of that business. We will look at the value of that business based on free cash flows and earnings per share. We'll compare it to the current stock price to see if that stock is priced at a premium, priced too high, or priced at a discount, where it offers up a nice discount compared to the value, the intrinsic value of that company. So this week we've got a couple of earnings, one big one and a couple of interesting ones. On Monday, we're going to see earnings from Campbell's Soup. And I heard a comment, which I agree with, is Apple somewhat resembles Campbell's Soup now. Very low, single-digit growth, has profit and pays a dividend. And that's the Apple stock, which is funny. So Neil Weston, good to see you. So Sprott's moved into gold feature. All right. So I'm not following that comment there. I guess, yeah, I'm not following that comment. If you could clarify that a little more, I'd appreciate it. Thank you. So Monday, we got Campbell's, but Tuesday, I think we've got CrowdStrike. After the market closes, CrowdStrike will announce their earnings. These guys have been doing well. I think it's priced a little too expensively. A little later in the live stream, I can compare CrowdStrike versus Zscaler versus Arista Networks and Palo Alto. Security software companies, there's kind of a general story that they're going to be necessary. I agree. Security software is always going to be a necessity. But the one thing I would just caution you is the best security software company of today will likely not be the same company in 5 years. They tend to rotate out as the security vulnerability, the threats, cybersecurity threats evolve, different companies become more important. So right now, CrowdStrike's doing great, but 2 years from now, the threats will be different. Maybe AI creates a different threat level or a different set of threats, and companies will move to that security software company because CrowdStrike's kind of, a really good company for the stuff we were dealing with for the past 5 years, but not for the stuff we're dealing with going forward. That's one of the things that I've observed in that space. If you look at the top security software company 5 years ago, it was a different name. It wasn't CrowdStrike. And 10 years ago, completely different name. Seems like every 5 years there's a new leader. And I don't see where CrowdStrike has complete dominance of the space. There's a lot of competition, and there's competition from big companies like Google just acquired a new company that does security software. They do it for the data center, multi-cloud, and those guys are really strong. I think that is a threat to CrowdStrike as an example. Microsoft has security software. That's a threat to CrowdStrike. So there's a lot of things coming at CrowdStrike. I wouldn't treat it as, hey, CrowdStrike's going to be strong forever, because they're not. Other ones, other notable earnings on Tuesday. Hewlett Packard Enterprise. I mean, that's kind of a company that is old school tech, and that's who's going to announce on Wednesday. Dollar Tree, Mongo, no big names. Thursday, we've got a big cap in Broadcom. I'll be really tuning into that one because I think Broadcom is priced too high, and I'll see where they announce. I think they've made some good moves. I must tip my hat to them. They're in the data center. They acquired a company that I think very timely, that is in the data center, that does software. But I think their growth is going to really slow down and stop. And investors will have to determine, is this stock way too expensive? I think it is. And but the market will have to realize that over time. Lululemon's going to announce, big apparel company. They were red hot a couple years ago. And then DocuSign, it's a stock that I hold. They've done really well with DocuSign. They're going to announce on Thursday. They're the leading software company for digital signature capture. So it'll be interesting to see what they say on Thursday. So we'll have a couple of earnings. It won't be completely dry of earnings. And then Friday, we have GameStop. The GameStop saga continues. I heard they wanted to put Bitcoin on their balance sheet and begin to manage Bitcoin in their balance sheet. I think they're trying to copy what MicroStrategies has accomplished, which is MicroStrategies was a software company. They started to put more Bitcoin on their balance sheet, a lot of it, and they became kind of a Bitcoin play. And good for them. They created shareholder wealth because the stocks really flourished. And GameStop's trying to kind of go into that playbook. We'll see if they pull it off. We'll see. And other than that one, I think Friday, that's the biggest one on Friday. All right. So as we get going on our live stream, let me get started with these security software companies. I think they're interesting to look at, interesting to consider. And when we look at, we're going to look at CrowdStrike, we'll look at Zscaler, maybe SentinelOne, Palo Alto, and Arista Networks. So CrowdStrike is a $117 billion market cap company. They have revenue of roughly $4 billion. So you're paying quite a bit for price to sales. You're paying about 30 times price to sales. That's expensive. If they're growing, might be justifiable. Forward P, really expensive. If they're growing, again, justifiable. Analysts say it's a buy, but it's priced at a premium of 13%. The price has been appreciating nicely. And you see that there is some volatility in CrowdStrike. See how it fell? Geez. Last late summer, it really fell. And then it kind of picked itself up and went up and to the right. Over the 5 year, it's done terrific. Really, really, really good performance for investors. Now they're riding this growth, 29%. They have to keep that growth to keep their stock price. Investors are not buying CrowdStrike at this stock price because it's going to grow at 10%. If their growth on Wednesday is reported to be less than stellar, this stock is going to sell off. Looking at the quarterly, the last quarter was at 25% growth rate. If you compare fourth quarter of 2025 versus the fourth quarter of 2024, you see that sequentially the growth rate is going down, and that's because the numbers are getting bigger. Now, CrowdStrike's kind of a one-trick pony. Keep that in mind. It's not like they do security software and they do other types of softwares that are going to give them more diversification. It's a one-trick pony. It does security software, and their main software and this isn't going to give me a really good description of it. I kind of scanned it really quick, but they do one type of software, and there's different varieties for um, security software. There's CrowdStrike, there's Zscaler, Arista Networks, Palo Alto, and even others. SentinelOne, McAfee. You've got security software from Microsoft, now from Google. There's a lot of competition in this space. It's just not one player. It's not CrowdStrike dominating the space. All right, so looking at their forecast, 44 analysts look at this stock, so there's plenty of opinions on it. And we do have some bulls that think the stock could go up to 545, which isn't much higher than where they're at. There is some bears that are thinking the stock's way overpriced. It should come down to 275. So you see where even analysts are saying, hey, this stock has really risen a little too high. Now looking at fiscal year, the fiscal year we're in is fiscal year 2026. It's going to end January 31st, 2026. And their revenue is expected to go 23%. Interesting, okay? So they were growing, when they were smaller, they were growing at 54 and then 36, 29, now 23. And that's, I think, part of the demise of this stock is as you start seeing these growth rates become less incredible, like 50% is incredible. 23, it's like, well, Microsoft's growing at 20, and they're gigantic. They're like 275 billion, while these guys are less than 5 billion. So this becomes less incredible. The PE is really high. They have to grow and keep their stock price at the same level in order for it to come down. And even at 66, it's going to be really high, and that's 4 years from now. So I think that's going to be interesting to see how this evolves. This line, if they do not grow, if they miss on growth in any way, this stock's really going to torture its stock investors. I think they're going to be in a world of pain because if this stock doesn't grow, you can't substantiate the stock price unless the stock becomes this casino stock and investors just want to buy it because they love the company. There's stocks like that. I consider Tesla to be a stock like that. In a big way, Palantir is a stock like that. And I'm not going to argue with it. Investors love those stocks and they're going to bid them up. But if you look at the fundamentals, they don't substantiate those stock prices. So I think CrowdStrike is a little too expensive. And let me see if I've got a valuation on CrowdStrike that I could share with you. Yeah, CrowdStrike is way overpriced. I think it's priced 64% too high. I mean, it's really, really priced high because I'm looking at free cash flows and I'm looking at net profits. And on those two metrics, it's priced, doesn't create enough value to match that stock price. So it'll be an interesting week for CrowdStrike, and we'll see where it goes. When we look at other stocks like Zscaler has done really well, but Zscaler is also priced a little too high by 26%, but not as bad as CrowdStrike. These security software companies, I think investors get their head around, okay, security software, it's probably going to be in demand. And I'm going to agree with that. But once you understand what security software does, I see that they're very vulnerable for the big guys, the Googles, AWSs, the Microsofts, to kind of take that space from them. They wouldn't have the network power to keep that from happening. If Microsoft went after Zscaler, it's kind of game over. Same thing with CrowdStrike. So CrowdStrike is priced way too high. Zscaler is priced closer to fair value, but still priced a little too high because Zscaler has gone up in value, or in price, I should say, quite a bit. It's up 63%. Zscaler has been a stock that I thought was a buy for many times on videos. You can see that it was trading $155 a share, $180 a share. Now it's at $275. So really, the buying was really desirable here, here, and here, right? And those were points in time when I said, hey, Zscaler is really setting up well for investors. You can buy it at a really good price. They're really growing well. They generate good cash and good profits. But now the stock's really gotten rich. It's gotten really expensive. So I can't say that about Zscaler. I can't go back into the past and say, hey, guys, go in your time machine and go buy it on April 4th. But I did say it. I did say it months ago. And for about a year, I've been saying Zscaler is a really good stock. And now the stock has been bid up, and the time to buy Zscaler has passed. Now you'd have to pay a higher price than what I think is the intrinsic value of Zscaler. So that ship sailed. Arista Networks, and this is an interesting one because I've been doing videos on Arista Networks for probably about 2 years, and I don't necessarily get hate mail, but I get a lot of people saying, oh, you really don't know what you're talking about. And I was pointing out that, hey, Arista Networks is priced too high. If you look at its intrinsic value and you compare it to other players in their space, they don't produce enough cash and enough profits to substantiate their stock price. And over time, I think that was proven to be a little bit accurate. The stock's really sold off, and it hasn't come back. If you bought at the beginning of the year, what's the year to date on this? This is down 21%, while Zscaler has probably done the best in the category. CrowdStrike's done really well, and Arista's fell behind. So that's where, in the same space, I pointed to Zscaler as being a discounted stock. 9 months ago, it was a great time to buy. You'd be up 75% on it. Arista Networks at that time, I was pointing to, this one's too expensive. And a lot of people were bought into Arista Networks, a little bit like I'm seeing with CrowdStrike. Oh no, Arista Networks is so great. I was like, well, they are a good company, but even good companies get priced way too high. And Arista Networks is part network company, part security company. Let us not forget. So when you look at their margins, they're not as good as like a CrowdStrike or Zscaler because their hardware business isn't as profitable. So Arista Networks, I was, correct in pointing out it was just too expensive for a while, and it's really sold off, and investors have paid the price for overpaying for a stock, or maybe staying in a stock too long, right? It's oftentimes a lot easier to buy into a stock, hold it, especially if it's a winner, and it's really hard to determine when should I sell? When should I sell that stock? It's really hard to determine that because you don't want to sell a winner. In Arista Networks, if you stayed too long, you took a 32% haircut. So that is Arista Networks, and I think I wanted to touch on Palo Alto. What's going on with Palo Alto? I don't think Palo Alto's done that great. Let's take a look. So it's up 5%. That's not too bad. For the 1 year, it's up 30%. That's not bad at all. It's had some severe volatility, but other than that, I mean, the stock's up 5.75 on a year like this. That's not bad. It's not keeping up with Zscaler or CrowdStrike, but it's doing okay. And Palo Alto isn't priced overly expensive, but it's not a bargain either. It's priced at about the same discount of Zscaler, and I think Zscaler has more momentum, so I'd rather own Zscaler than Palo Alto. So this space is expensive. That's the cut and dry. Is the security software space is expensive. Investors understand that, hey, this is a necessity, but sometimes a thesis that is overly simplified is a little dangerous to investors because the stocks, it's an opportunity and a danger. It's an opportunity if you get there early, and then the retail investor will buy that stock up, bid up the price. Well, if you're smart, you would get out of it and take the gain, do a victory lap, and put that capital into your dry powder. But if you stick around too long, then you're gonna see these volatility runs where you lose. Like on Palo Alto, investors lost 26.8% at one time, and more recently the stock's been seeing some volatility. So that is Palo Alto. So the security space has been a good one, but investors have to be vigilant and study their stocks. If you're in one of these stocks, what's your exit strategy? You can't stay there forever. Even I think Palo Alto was a darling for a while, and Arista Networks was a darling for a while. And more recently, as noted, investors have been getting abused. And this is what happens when you stay in a stock too long. You got to have a solid exit strategy, take your gain, take your victory lap, and move on. So that would be my lesson for you guys, is be careful out there. So those are security stocks. I thought I'd point those things out. We'll see how CrowdStrike announces on Wednesday. See if they announce positive earnings, if they're going to substantiate their high stock price, or if they're going to take some medicine and see their stock price drop. That'll be interesting to see. All right, so thanks for joining, everyone. I appreciate it. We've got a good number of people on the stream. While we're here, let me point out a few things. So as you guys may know, I have a membership program on the YouTube channel, and I wanted to just see if you can consider becoming a member. It comes with really good perks. The perks include access to the tools that I use to analyze stocks and member calls. Comes with member-only videos that I produce regularly, and the Discord channel, an invitation to the Discord channel, among other things. So take a look. It'd be great to have you as a member. And on live streams, if you want me to review a ticker, go for it. You just put a ticker on there. We review it. We go from soup to nuts on stocks and collaborate on that area. So take a look. I'd really appreciate it. Just to show on videos, there is a category of member-only videos that only members get to see. And here is that directory. So I provide my buys and sells each week. I look at stocks and really provide detailed evaluations on stocks. These are like 20-minute videos, and really look at earnings through a different lens, a more precise lens for members. So take a look. It'd be great to have you become a member, and I would appreciate it. Thank you. All right, so back to looking at stocks. So for the next segment, I wanted to take a look at Berkshire. And I wanted to point out something that I heard the great Warren Buffett say at the beginning of May. So Berkshire Hathaway had their annual meeting at the beginning of May. And I believe it was May 5th is when they had it. And since then, the stock is down 5% for the month of May. And Warren Buffett asked, hey, let's talk about buybacks. Berkshire Hathaway, why aren't you guys buying back a lot of shares? And he said, well, because the Berkshire Hathaway stock is not a bargain. That was a direct quote. What Warren Buffett was saying was the Berkshire Hathaway stock is expensive. It's not a bargain. Interesting. Wow, that's coming from the horse's mouth, that the stock is expensive. So what was also announced at that meeting was that Warren Buffett is handing over the control of the company to his successor. And the new guy is solid. Can't say anything bad about him. I think he's very qualified and very good guy, but he's not Warren Buffett, and he's not Charlie Munger. Those guys are legends, and a lot of people just are fans of Warren Buffett. It's like, you know, the Chicago Bulls. They had Michael Jordan, and once Michael Jordan was gone, it was a great franchise, but it was nowhere near as good as it was before. You can look at any other like franchise, and once you lose a super legendary talent, you know, usually the performance goes way down. So we'll see how Berkshire does. But my guess is over the next 5 years, this is not going to be a performing stock. I actually would guess that this stock goes to like $300 a share over the next 5 years. And it's not any disrespect to Warren Buffett. If you guys listen to me through my videos, I can't have any more respect for Warren Buffett and appreciation and gratitude for him. But I just need to call it like I see it, is Berkshire is an expensive stock. I believe I did do a valuation on Berkshire. Let's see if I have it handy. So here's Berkshire Hathaway. It's priced 20% too high. And that's using a discount rate of 7%, which frankly is a little too low. It should be 8%. And the stock's just priced too expensively. They have good earnings, but their cash flow isn't very good. And they own stocks that are not doing great. Apple being the biggest holding they have, and Apple's doing bad. So is Berkshire going to perform going forward? Well, for a long time, people owned Berkshire because of Warren Buffett, and it continued to rise. But Warren Buffett's not going to be in the picture for much longer. Over the 5 year, it's up 150%, which is very good and very consistent. That's the other thing. But the next 5 years, I don't know that it's going to be 150% gainer. I actually think it's going to go down. It's going to go down, and once you lose the specialness of Berkshire, which is, you know, hey, Warren Buffett's the one behind a lot of these genius trades, what do you have, right? What are other CEOs going to, how are they going to react to the new CEO, right? Because Berkshire owns like a bunch of companies, and those companies are run by these CEOs. Are they going to have enough respect of the new Berkshire Hathaway leader? I think they will, but they just won't have like the super respect that they have for Warren Buffett. I mean, who would ever argue with Warren Buffett? He just tells you what to do and you go do it. You have no questions for him. You have no rebuttal. But I think maybe going forward, maybe that's lost. I don't know. We'll see. I think the stock is expensive. Warren Buffett, again, I quoted him. He didn't think the stock was a bargain. So I think Berkshire is a stock that could go down in the future. So we'll see how that plays out. All right, so something else that's going to happen in the next 2 weeks is going to be the release of Tesla's robo-taxi service in Austin. It's supposed to happen on June 12th. Let's see if I can find any new articles. I've been keeping my eye on this. And we have some stories here from Bloomberg. This is 4 days old. So they're making a big deal out of this release on the 12th. Now, Tesla in the past, you know, they have had releases that were undermet the kind of expectations. And when they released product, they were really late. Hey, we're going to release a Cybertruck, and it was like 3 or 4 years late. So the company doesn't have a great track record of getting there at the date that they said they were going to do it. So we'll see how much they release on the 12th. It's going to be kind of a trickle of cars driving around in Austin, or if they're really going to be, you know, kind of a force to be reckoned with. So we'll see. We'll see. I think there's some investors, and I would say they're kind of fans of Tesla, where they just believe so much in Tesla. Like, oh man, this thing's like awesome. They're a technology company. And in a way, I'm also a fan. I just think it's incredible they launched EVs. But I'm also reasonable. And I look at their financials, and their financials are terrible compared to the market cap. So we'll see how much they are able to execute on the 12. If it's kind of a big miss, like, wait, there's like 10 cars. There's 10 cars driving out in Austin, while Robotaxi from Waymo, they have like 100,000 cars. That's scale. Waymo and Uber are operating in Austin. So it's a really good situation to have Tesla pick Austin because it's a good compare. And right now on Uber, when you're in Austin, Texas, I believe you're able to ask for a robo-taxi. It's not going to put you in a robo-taxi automatically because I think some people would be uncomfortable with that. You know, hey, a car showed up with no driver. I don't want that. I want a driver. I want a human being. Me, myself, I would love that, but some people wouldn't want that. So in Austin, I believe you get to pick. You can either opt into robo-taxi or you get a regular driver. Well, Tesla's going to launch in Austin. Is that going to go well? I am all ears and all eyeballs on seeing how that goes, because that's going to be really interesting. As far as the stock, Tesla is one of the most overpriced stocks in the market. And these types of like celebrity stocks are, you know, they're hard to kind of price because there's a celebrity kind of premium to them. But if you price them on free cash flow, Tesla, if you price Tesla on its earnings, it's way overpriced. I mean, their cash flow is terrible. They're supposed to be a $1 trillion market cap company, but you compare them, you know, remember this number, 3.5 billion. A company that's similar to them in size is Meta. Meta produces $62 billion of cash compared to 3.5 billion. What the heck is Tesla doing at a valuation of $1 trillion? That's like, they don't qualify on a fundamental perspective to be a $1 trillion company, but they're a celebrity stock. They're kind of a fan favorite. Fans of Tesla, Elon Musk are like, oh man, these guys are going to change the world and make lots of money. Well, for sure, Elon Musk is going to make a lot of money, but I don't know about stockholders. The stock has seen drastic volatility over the past, where you've seen the stock really see volatility just in the last year. Look at this. Jeez, it sold off dramatically after the election. 52%. Whew. It saw a huge rise due to the election, but then it more than doubled in value over the course of a couple months. Then it gave up a lot of that value. So it's the celebrity status of the stock. More recently, it's up 52% over the course of 5-6 weeks. Incredible. But I don't think it's sustainable. I think this stock is really, look at this volatility. Incredible. Although the stock is up nicely, 486% over the 5-year, the volatility is really, really, really something. So there is Tesla for you. I think it's really overpriced, but the market's the market. The market is going to react to the celebrity status of Elon Musk and the Tesla stock. I'm going to stay in my lane, and I'm going to invest based on fundamentals, based on the intrinsic value of a stock, and try to find stocks that are really desirable that are discounted versus stocks that are really popular. And I'm just jumping in the boat with everybody else because the story makes sense and I just believe in the leadership. That's not me. That's somebody else. I'll let somebody else invest like that because when things get rough, I think the stock's going to really, really hurt. investors. So that'll be interesting to see what happens on June 12th. And if there's anybody in Austin that attends a live stream, I'd love to hear from you because I'd love to get your firsthand observation on, are there a lot of Tesla robotaxi cars that you're seeing being driven around? Or do all the Tesla cars have, specifically the ones for, I guess, the Tesla service, they all have drivers? So that'd be really interesting to hear firsthand from somebody who's out there in the field. Year to date, the stock is down 14%, seeing a lot of volatility. We'll see how it does in 2025. And one last thing I'll check in on is who's in Tesla right now, like some super investors, right? Who owns Tesla? There's two investors left that own Tesla. Josh Tarasoff and Viking Global Investors, and they bought into the stock. Interesting. When we look at activity in Q1, Viking Global Investors bought into the stock, and then Josh Tarasoff reduced his position. Daniel Loeb sold 100% of the shares. Lee sold. David Katz sold. If they sold at the peak, boy, they did a nice job. And then in Q4, Viking bought. No, they sold, excuse me. Man, that must have been weird. If they sold before the stock rallied and then they bought after it rallied, these guys must be losing a lot of money. So not a lot of big investors like Warren Buffett or, Bill Ackman or Michael Burry. None of those guys. These are good investors, but they're not like the biggest names in super investors are bought into Tesla. Interesting. All right, so that is Tesla. David Knight, did you get on the ELF hype? Yeah, so I think Zim it was hard to see how Zim was going to be affected by tariffs, but my conclusion now is that the tariffs probably created a disruption to supply chains, and now importers of goods in the United States are going to have to pay higher rates to get product in. I think the volume of shipments is going to increase going forward. The rates are going to increase, and Zim's going to benefit. So I think Zim's a good buy. And if you're a holder of Zim, you're in a good spot. Did I get on the ELF hype? No. And is this ELF Beauty? Yeah. So ELF Beauty, year to date, down a little bit, but look at this. I think this stock's up 125% in 2 months. Incredible. This is small cap. Yeah, 6.27 billion. So over the 1 year, it's down 42%, but buying at the right time, boy, you're just loving life. I think an investor in the community is in ELF, and he was dancing. He was dancing in the streets. I think they had an announcement. Yeah, here it is. And they jumped up 27%. Incredible. So the stock in the last 5 days is up 40%. So I'm not on the train. I wish I was on the train, but there was just, I don't have a lot of knowledge in the beauty category, and I'm going to stay in my lane. I just don't get those companies as well as others, and I've never seen the fundamentals that attracted me into one of the investments. I would say that in beauty, there's a lot of competition, right? You have Estee Lauder. I mean, you have 100 companies trying to do beauty, and I think beauty companies, many of them, I would say a lot of the new ones, they're hot for a couple of years and then they fade. Then you have some of the legendary long-term successful companies, and they are the ones that are acquiring the smaller players to some extent, but it's a space that I'm not great in, so I did not get on that train. But I'm glad somebody was on it that I know, and he made a lot of money, so good for him. So that is Elf Beauty. So a trade that I haven't talked about in a little while is China. And China for a while was doing great. And year to date, it's still in the green, 2.60. And if we look at the 1 year, it's up 8 points. This is the whole index of Chinese stocks. It's up 8.74. And last fall, they saw a really nice rise of like 25% over a couple months. And some stocks have really flourished in that space. So let me take a look at a view that I like to look at. So here are the stocks in China, the biggest ones, and year-to-date changes. So Alibaba is looking great, 34%. And I think the economy in China continues to get better and better. There was a report last week that the industrial output in China, a reading that they had, ended up coming in much better than expected. So it was more positive than expected. So that was really good news for Chinese companies. So that's a bit of good news. The resolution of tariffs, if anything, the de-escalation of tariffs between the US and China, that was really good news. So overall, I think China is going to be a good place for me to diversify. I have most of my investments here in the US, but I like diversifying in China. I own a good position of Alibaba. Really glad I've done so. Done really well this year. NetEase is up 36%. JD not having a good year. And I also own an ETF that buys a cross section of companies in China, which most of these top Chinese plays are in that ETF. I also own Futu, which is a brokerage. It reminds me a lot of Robinhood, and it's kind of like the Robinhood in China. So I like owning it for that reason. Prudential, and I believe they do insurance services and products. They're doing great, up 43%. And then Li Auto up 18%. Baidu is down. Tencent up 48%. Xpeng up 63%. So the China trade is still going. Looks good. And Futu, this is the one that I own right here. I really like this company. The growth has been phenomenal. Profitability, everything. It's like a carbon copy of Robinhood, but in China. And Robinhood here in the US, they've been flourishing. Really good stock, really good performer. And looking at the rest, I think I can't really name NEO. I know NEO was pretty hot a while ago. Pony AI. Wow, look at that. 34%. So the China trade's still working. It's still working nicely. Let's take a look at BABA. What is going on, BABA? So year to date, BABA's doing well, up 34%. A lot of its appreciation was early in January. Wow, look at that, 83% in just 3 months. Bang, bang, bang. And actually, that's 2 months. And it gave up some of those gains when we saw the big sell-off created by the big tariff day. But since that big tariff day, the stock is up nicely. So BABA, I'm happy to have held BABA for a while. It's good to see it flourish. And the diversification I like, because most of my stocks are in the US. So having a few stocks in China and playing that economy, I think is a good idea long term for my portfolio. So David, the stock was called Futu. I'll open it up. So Futu. So Futu Holdings is a lot like Robinhood. It's a brokerage. It provides predominantly it services people in Asia, China, Japan, Korea, Vietnam that want to trade stocks, a lot of stocks in China, but they also can buy American stocks and so forth. So that's Futu. You also may know them as Moomoo. That I think the brand Moomoo is what they offer here in the US and Futu in Asia. Futu's up 27%. It's seen a lot of volatility. You could also buy crypto on Futu. Over the 1 year, it's up 37%. The fundamentals on this stock are fabulous. Let me show you just real quick. So when we look at revenue growth, 54%, and they're a pretty good sized company. This is in the Hong Kong currency, this is in millions of Hong Kong. So I think once we net that out, I think I can get you that in a little bit, but let me just go over percentages. So 54% growth, trailing 12 months, really good growth. I think if I go here, this is where it converts everything to US dollars. So market cap, 14 billion, PE of 17, price to sales of 8. Even though they're growing that fast, you're buying the company, price to sales of 7.88. That's a bargain. Cash, 12 billion. Debt, only 1.44 billion. It's a lot of cash. And the market cap of the company is 14 billion, and they have a surplus of close to $11 billion. So you're really only paying $3 billion for the company because they have $11 billion on the balance sheet. That's great. So debt to EBITDA is really non-existent because they have more cash than debt. So return on equity, 23%. Just a really, really sound, like fundamental profile for this company. Forecast, only 4 analysts cover the stock. Not a lot. I cover it, but only 4 others do. And their growth is going to persist. Good revenue growth in the future. And this stock's doing well. This is kind of a smaller cap play, only at 14 billion. But boy, as people in China join that middle class and they have been working for a long time, they've saved up money, they have capital, they want to put that capital to work. I had give you an example. I have a previous employer that has this had a 401k that didn't have a lot of flexibility in it. I only had a few options. And I took a peek at it. I'm going to move those funds in September. But the rate of return this year on basically the 4 funds that I own there is negative 1%. That's terrible. I'm doing close to 10% rate of return year to date on the portfolio that I manage directly. I'm like, geez, man, I want to get that money over so I can start managing it. Now, the same goes in Asia, where people are probably seeing others make money investing in stocks, investing in crypto, and they want to start, putting control in their hands, learning how to invest successfully and making money. So I think that's just going to continue to grow because people are savers in Asia, but the good part of that population of savers is going to want a higher rate of return. So I think it's going to be good. Yeah, I would say that Futu looks like SoFi, but I think the fundamentals are better than SoFi, if I may say. I've never owned SoFi. I just feel like there is some vulnerability to the stock that some of their fundamentals aren't great. Their growth is good, but they're growing in businesses that aren't very profitable, in my opinion. All right, so that is Futu. So the China trade continues on. Glad that China trade is working for me. Let me take a peek at one thing. So I own an ETF, FLCH. So FLCH is up 12.66%. And these guys own just a nice list of stocks, FLCH. The holdings include Alibaba, Tencent. Tencent was doing really well. This company is really doing well, and you can only buy it in Hong Kong. Xiaomi, these guys, they do mobile phones, and now they're doing cars. So they're doing EVs. Those guys are growing like a weed, just growing really well. And it owns all these here. And I'm glad I own this ETF. It's doing well. I've thrown more money into it. A good way to diversify, so that way I own great U.S. companies. That's a majority of my net worth. But then I also own some companies in China as a diversification. All right, so the China trade is alive and well. It's looking good. All right, so those were the segments that I wanted to cover today. Thank you so much for joining me. I wanted to just bring your attention back to the fact that I'm inviting you and asking you to consider being a member. You can go to my homepage to get more information on becoming a member. Click this guy here, this button, and it'll give you the details of each program that's available. Good tools, member-only videos, more access to the channel, the Discord channel, and so forth. So I'd appreciate it if you can take a look and become a member. So that is it, folks. I think we have an exciting week coming up. It was a great month, and we'll see how the week goes. I think the big highlights on earnings will be earnings from Broadcom and then CrowdStrike. We'll see what kind of news comes out of Washington. There's always kind of something coming out of Washington that moves the market. We'll see if there's any disruption to stock prices. Hopefully there's not, but let's just be realistic. There probably will be some surprise stories that come out and affect stocks negatively. So that's it. Everybody, thanks for joining. I appreciate it. And look for me to stream this week a little less. I streamed quite a bit last week, but this week I've got a pretty good schedule of activities, and I'm probably not going to be a stream as much. So I'll kick out a few videos during the week, and I'll have my investor calls most definitely. So everybody, good luck this week. Hopefully you make some good money, and I appreciate you tuning in. Thank you.